What is tiered pricing? Well, in this short video, I'm going to talk about this really important pricing structure for merchant services. It's actually used a lot more commonly today than you might think. When I was starting out in merchant services 15 years ago, everybody was on tiered pricing. Then it kind of got less popular, and then it's had a resurgence recently, which I'll talk about. So first of all, what is it? Well, tiered pricing, very simply, we talked in the last two videos about the interchange table. So if you missed those, go back and check those out. But when you think about the interchange table, it's very complicated. There are hundreds of different interchange categories. Each category has its own cost structure, and so a transaction will fall into a particular interchange category based on all these different factors like the type of card, the method of entry, the type of business, and all these things we've discussed. Well, that means that the statement is going to look very complicated because there's all these different rates. So there's this idea that, wait a minute, maybe we can make it simpler, right? Maybe we can make it simpler. Well, how do we do that? Well, we're going to take all of these different interchange types and we're going to put them into one of three buckets or categories that are called qualified, mid-qualified, and non-qualified. Okay? So let me explain what those are, and then I'll talk about something called six-tier pricing and how this all kind of comes about on the statement. First of all, what is these different, qualified, mid-qualified, non-qualified? Well, qualified usually means it is a standard card, so it's a regular debit card or a regular credit card. It's not a rewards card or a cashback card or a corporate card or anything like that, right? It's a regular card, and it was presented at a physical location, right? And it was approved. That's usually a qualified transaction. Now, bear in mind, as I tell you this, every processor has a slightly different mapping as far as which transaction gets to qualified, mid-qualified, and non-qualified. But I'm trying to give you high level so you understand the basics of it, right? So those are qualified transactions. Now, mid-qualified usually has to do with the method of entry. In other words, usually a transaction is mid-qualified because it was, called in over the phone. So for instance, let's say I'm looking at a statement from Pizza Shop. Their qualified transactions are going to be those regular cards that were brought in and like inserted or tapped on the device, okay? The mid-qualified transactions most likely are going to be the phone orders that people called in to make the order for the pizza over the phone. Why? Because it's a slightly higher level of potential fraud and chargebacks because, hey, they called over the phone. We don't really know if it's the person with that card. We couldn't check their ID or anything like that, right? So, so we have that issue, right? So again, qualified is going to be your lowest rate. Mid-qualified is going to be your middle rate, of course. Then we have non-qualified. Now, non-qualified usually is going to be about the type of card that's being used. Okay, so non-qualified is going to have to do with, it's a corporate card, it's a cashback rewards card, something like that where there's these rewards. So you know how you can get, all kinds of rewards on your credit card, cashback, frequent flyer miles, whatever. Well, somebody has to pay for those rewards and that cashback you're getting. Usually it's the merchant that pays for that because those transactions are considered non-qualified if they're on tiered pricing. Now, of course, there are many exceptions to the very simplistic rules I just gave you. For instance, there's also something called a downgrade, which I talked about in the interchange optimization video. A downgraded transaction would certainly be considered non-qualified. Just like there are certain types of cards where even if it's presented at a physical location, it's not a really high cashback, so it's not going to be non-qualified, but it would be mid-qualified. So there are exceptions to that, but as a general rule, when you're looking at simple tiered pricing, when you see qualified, mid-qualified, and non-qualified, think about qualified as just regular cards that are used at a physical location. Think mid-qualified is going to be your method of entry. It was an online transaction, a shopping card, or it was an over-the-phone transaction. And then non-qualified, think it's the type of card. It's the corporate card, cashback card. That's generally how it goes. So now that you understand that part of it, let me give you the two major differences or the two different types of tiered structures you're going to see on a statement. The most common one you're going to see today is actually what's called two-tier pricing. Okay? Now, two-tier pricing is interesting. Two-tier pricing says, we're going to take all of this different, interchange rates and we're going to put it into one of two buckets. Card present, card not present. That's it. This is very common. Companies like PayPal, Square, Stripe, and others have different pricing structures that they'll use like this. So they'll say, well, if you have a transaction that's done at your location, we assume it's going to be a lower cost. There's also a much higher likelihood that it's not going to be like a corporate card, because usually those are called in over the phone. They're not normally in person. So they're like, we'll just say, you're going to pay 1.5% if it's in person, and you're going to pay 2.5% if it's card not present, or 2% and 3.5%, or whatever it is, right? So that's two-tier pricing, okay? The other one is that you'll see pretty often is what's called 6-tier pricing. Now, 6-tier pricing is where we have qualified, mid-qualified, and non-qualified, but we have it for both debit and credit. So there's debit qualified, debit mid-qualified, debit non-qualified. Then we have credit qualified, credit mid-qualified, credit non-qualified. Now, why would we do that? Well, the reason is because it, generally speaking, on average, it's less expensive to process a debit card than it is a credit card, okay? So it makes sense to give people a different price point or a different cost, depending on which card type they are using. So that gives you an overview of tiered pricing. It's still very popular. One last thing I want to give you, a little last tip, is when you're looking at a statement, one of the things to always look for is when you're looking at the big interchange table, we talked about interchange padding. Well, there's actually one form of that that's not really interchange padding, it's just tiered pricing. Sometimes instead of them taking all of the qualified transactions and putting them in one like line item on the statement, it says, $10,000 and 100 transactions were, qualified. Instead, it'll actually give you the interchange table, but the rates will be the tiered rate. So it won't say mid-qualified or non-qualified. It'll give the name of the interchange category, right? But then it'll have the rate. So the way to tell that is if you're looking at an interchange table and you notice that there's, a bunch of the transactions are one rate and a bunch of them are another rate, and there's only like 3 or 4 rates on there, probably you're looking at tiered pricing that's displayed like an interchange table. Now that gets really tricky. How do you do an analysis on that statement? Easy. Upload it to ISO AMP. We will do the heavy lifting for you depending on the statement type. Sometimes we'll split that up as like volume rates. Sometimes we'll show it as interchange markup, just depending on what's going to look best. But if you upload those confusing statements to getisoamp.com, we will do everything for you, and we already have all the artificial intelligence, the automation, and even the human experts for those really tricky statements that no computer is going to figure out. We can take care of all of that for you. We do every statement. We do almost all of our statements instantly, and the ones we don't do instantly, we have a team of experts that will work with you on those. So we'll take care of everything for you. We do 100% of the work. You can check it out at getisoamp.com or click the link below this video to learn more.